What's up, everybody? I finally had a chance to dive into this Trump tax bill because I wanted to know what exactly has remained the same, what has changed, and here are the top 5 things that I found reading into the Trump tax bill. Now, number 1, the QBI deduction. It is here to stay. It has been made permanent. So if you have a pass-through entity that you've qualified for the QBI deduction, this 20% deduction, you'll be happy to hear that is a permanent deduction that you can take going forward. The only thing that I saw that changed is they raised the phase-in thresholds to $75,000 if you're single and $150,000 if you file jointly. Everything else looks like it's the same, the qualifications, the exceptions. I don't see anything that's different from the QBI deduction. Besides, it's permanent and they made those phase-in adjustments. Now, number 2, Section 179. This is where you're depreciating a fixed asset all in 1 year. Now, they raised the limits to $2.5 million. That's about double of where it was in 2024. So Section 179 deductions have significantly increased. Also, if you got any value out of this video, please smash the like button and consider subscribing. Helps the channel grow. Bonus depreciation. Number 3, it is back. 100% bonus depreciation. Now, I have a video that I'll link in the description that goes over the differences between Section 179 and bonus depreciation. But bonus depreciation, you get 100% of qualified property. You can take the full deduction in the year that you put it in service. These are for assets from the beginning of 2025 all the way to 2029. Number 4, the SALT deduction. I got 2 angles on this. 1, if you're a pass-through entity and you've been using the SALT deduction to save federal taxes, that's still in place. That was not taken away. Continue doing that. Have your pass-through entity pay your state taxes so you get the federal deduction, and that'll ultimately flow through on your K-1. I also have a video related to pass-through taxation and how to pay state taxes that I'll link in the description. Check that out as well. Now, at the individual level, the SALT limitations for Schedule A was $10,000. They've increased that to $40,000 with a $500,000 phase-out limit. So if you have income above $500,000, that $40,000 is going to start phasing down, ultimately down to the $10,000 depending on your income level. And number 5, no tax on tips and overtime. Now, there's limitations to this. So for tips, you can exclude up to $25,000 of that income. It's going to be a above the line deduction. I'm assuming their W-2 will have a box that will highlight what your tips are, and you can take up to $25,000. Same concept for overtime, $12,500 for single, $25,000 if you're filing jointly. This is, I'm assuming, going to be on the W-2. You can exclude any overtime paid that is non-taxable, and there'll be a line on the 1040 where you can deduct this. All right, well, I hope this is helpful. These are 5 things that came out of that bill. There's way more inside this bill that we can go over, but I just wanted to throw out some 5 things that I thought were important for people to know. Have a good rest of the day. Take care, and I will see you in the next video. Take care, and goodbye.